Business now on the programme. Charles is with us. He's looking at the state of the US economy 1 year since the return of Donald Trump to the White House. Going to start, aren't we, Charles, by hearing what Donald Trump is actually saying about it himself.
Well, the US president is quite predictably painting a rosy picture of where the economy is headed right now, and by some very important measures, he is right to say so. The US economy grew at a very healthy rate of 4.3% annually in the third quarter of 2025. That's the latest data available. And that figure was at 3.8% the previous quarter. U.S. stocks have also seen their value soar over the past year. Let's take the S&P 500 index, for instance, which aggregates the performance of the top 500 companies listed on U.S. stock exchanges. Well, those shares have risen close to 15% in value since last January, boosted by the artificial intelligence boom and in spite of the shock to the system that was Trump's Liberation Day tariff announcement back in April, where you see that dip there. This is partly what's led Donald Trump to feel triumphant when he gave an economic speech earlier this month.
Right now, I'm feeling pretty good, though, I will say. Oh, you're so lucky to be here. Under our administration, growth is exploding, productivity is soaring, investment is booming, incomes are rising, inflation is defeated, America is respected again like never before.
As you can see, Trump feels pretty good about it. Not necessarily, though, a feeling shared by a majority of Americans.
So some economists are describing the U.S. economy as a K-shaped economy, one that has two separate tracks going in different directions. The first track refers to the wealthiest Americans who are seeing their stocks and assets, notably real estate assets, continue to climb in value. The second track refers to lower and middle income Americans who are struggling in the face of inflation that remains persistent at 2.7%, the latest data, with also food inflation at 3.1% and wages barely keeping up. And that second track doesn't own stocks. Actually, 93% of stocks in the US are owned by the top 10% households. Looking at the US's total household net worth, which is what you're seeing on this graph, leads us to discover a staggering statistic. The bottom 50% of US households only own 2.5% of the country's wealth. So whether home prices and share values are increasing won't make a difference for a large part of the population. Food prices going up, though, will.
Yeah, not necessarily something that can be pinned on Donald Trump, though?
Well, you saw on those charts, those are trends those inequality trends have been in motion for quite some time, and it's not abated under Trump. According to one CNN survey published last week, actually, 55% of Americans believe economic conditions have worsened under the Republican president, and that's what people voting in the midterm elections later this year will be thinking about, which is why Trump has been announcing a number of, quote, affordability initiatives in the past few months or so. In November, the big one is that he exempted dozens of agricultural products from his reciprocal tariffs, but whether those are genuine attempts to make the American dream more accessible or just an electoral tactic remains to be seen.
And Charles is going to finish up with another aspect of Donald Trump's economic policy. Of course, it's tariffs. His tariff policies overall, the global trading system, adding friction to what used to be a seamless international exchanges of goods, and it's really changing patterns globally. One very small example, German winemakers used to target the U.S. market for their exports, but the trade war has prompted a shift. They're now setting their sights increasingly on China. Take a look at this report from our correspondents in Germany.
Here in Germany's Moselle Valley is where Riesling is born, an internationally renowned white wine. A leading export, long popular in the United States, but now winning over another rapidly expanding market.
Our Riesling vineyards are mainly located on the other side of the valley. These are the wines we sell in China because consumers there appreciate the grape's light residual sweetness.
As early as 2019, when tariffs imposed by Donald Trump were already weakening the sector, Kilian Smitkus placed a bold bet, turning his back on the US market and going all in on China. Today, around 1 in 10 of his bottles is sold to Chinese consumers. He even showcases his wine at Shanghai's major international wine fair.
We export very little to the United States. Our sales in China are significantly higher. More broadly, Asia and India as well are the most promising growth markets for us.
While the United States remains the leading market for German wines, exports there dropped by 10% last year. By contrast, exports to China rose by 10% and by as much as 35% for Moselle white wines, a crucial new market for an entire industry and its 5,000 winemakers who generate 90 million euros in annual revenue. The German Wine Institute and regional producers like Eric Riffel are making diversification a top priority.
We already have 2 regular clients in China and many more under discussion. We don't depend on a single country, we go wherever Riesling is appreciated.
China alone will not offset the losses we're seeing in the United States. But if we manage to grow across several similar markets, the outlook can remain positive.
So far, the bet is paying off. Despite an overall decline in wine drinking in China, German wines are selling better than ever in the country, driven largely by the Riesling boom.
Charles, thank you very much. I'll pellegrine with the business of France 24. We're going to look through the